Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you one of the best option strategies out there, and it's one I use personally in my option portfolio almost every single period. I'm going to show you how to implement and give you a walkthrough of this option strategy and how it's going to be allowed to make you get some short-term gains as well as long-term gains. I'm going to go ahead and use this option strategy on a stock that's trending right now in order to make you better understand how this strategy is to be used. Now, if you are new to options trading or you're trying to use options in order to get some additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you my bread and butter strategy that has allowed me to grow my options portfolio. I'm going to give you a complete walkthrough of this option strategy, and we're going to be using that option strategy on none other than Robinhood, and that ticker is HOOD. Now, before I go ahead and start off, let's go ahead really quickly and jump into the chart. So we're going to go ahead and hit the advanced feature right here in order for us to open up the chart. Now, the only reason I'm opening up the chart is to show you guys how the chart looks right now, to let you guys know, okay, this is how the chart looks right now. This is not a setup that I'll actually ever trade or invest in. However, just for the purpose of this video, I'm going to show you, even if you do have a setup like this that is not favorable, you can still go ahead and use this option strategy based on the stock that's trending and the reasons why it's trending. So let's go back to Robinhood right now. And for those of you that do not know, Robinhood is confirmed to be entered into the S&P 500, and that's going to be initiated anytime after September 22nd. Now, because this stock is confirmed to go into the S&P 500, it will be going up in value over time. As you guys know, the stock market is not linear. So there's no way this share price is just going to keep going up. It's going to go up, then you're going to have some slight pullbacks, then it's going to go up again, and it's going to do the same thing all the way up until it's entered into the S&P 500. So the basis of today's option strategy, I'm going to show you how to capitalize on that momentum in order for you to get short-term gains and long-term gains. Now, let's go ahead and jump into Trade Hood options down to the bottom in order to go ahead and open up our options chain. Now, for this option strategy, we're going to first go ahead to buy. We're going to go ahead to call, and we're going to go ahead and choose our strike date. The strike date I'll be going with is going to be September 18th, 2026, and that's going to give me 371 days to expiration. Let's go ahead and select that one. Now, right before this video, I did make another video that gave you 3 option strategies in order to trade Robinhood right now. On my live trading video, I give you a step-by-step walkthrough and a live trade of using one of those strategies. Today, I'm going to go ahead and add another option strategy that can be used in order for you to capitalize on Robinhood. All right, if you guys want, go ahead and check those videos out. I will try to link it in the description below. Now, before we go ahead and actually do this option trade, I want you guys to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number 2, you need to do yourself. Always make sure to have an exit strategy before entering any trades. That way, if the trade do decide to go tits up, then at least you could get out of the trade. And for today's video, I'll be showing you exit strategies as well. So now that we have buy and we have call and we have our long dated expiration date of September 18th, we're going to go ahead and choose our strike price. The strike price I'll be choosing is going to be right below the share price, and I'll be doing what's known as ATM or at the money. The at the money strike price I'll be using is going to be the $115 strike price. Now, ATM or at the money, all it simply means is the strike prices that are going to be the closest to the share price. ATM, you always get 2 prices at the money. It's always going to be the price right below the share price and also the price right above the share price. So 120 and 115 are both known as ATM or at the money strike prices. So for the purposes of today's video, I'll be going with the 115 price at the money. Now, with the $115 price, we have a delta. The delta is going to be 0.65. When doing this option strategy, delta is of paramount importance, and I will show you why as the video continues. So our delta is 0.65. Now, because this is a buy option strategy, we're going to have to pay. The amount we're going to have to pay is going to be $30.90. Each option contract does contain 100 shares, so you would need to multiply your $30.90 in order to get $3,090. So this option strategy is going to cost you $3,090. Now, before I go ahead and explain to you why you would want to do this, let's go ahead and click into it. So this option strategy is known as a long call or a LEAPS option. A LEAPS option is a long call that extends 365 days and beyond. Now, why would you want to use a LEAPS option? It's quite simple. The reason why you'd want to use a LEAPS option is that you're not able to afford 100 shares of the current stock outright. So for instance, Robinhood right now is trading for $116.70 as of making this video. If you were to buy 100 shares in order for you to go ahead and do options, it would cost you around $11,600. However, if you were to go ahead now and utilize the LEAPS option strategy, you would still be able to control those said 100 shares, but now you're going to be able to control it at a much lesser value, which is going to be $3,000. Hence, in certain situations, it is always better to go ahead and do a LEAPS option. Now, always make sure to do your own due diligence before doing this. LEAPS option cannot be done on any stock, and it's actually not supposed to be done on Robinhood right now, but I will go ahead and explain to you why it can be done on Robinhood right now. So now that we have the LEAPS option in your portfolio, here's what you're going to do. You're going to sit on it and you're going to do absolutely nothing. That's right. You buy your LEAPS option, it's going to be in your portfolio, you do nothing. And I do understand that is one of the hardest things for traders and investors to do is nothing. Now, let me show you how you're going to make short-term gains with this option strategy. So we're going to go ahead and jump into our exit strategies. So my exit strategy is going to be to get out in either of two places. My first exit is going to be when this share price goes to 120. And then the secondary exit is going to be when the share price goes to 125. So let me explain it to you. Whenever this share price of 116 hits 120 or above, then I'm going to start keep paying an eye on, paying close attention to it. When it gets to 125, then I'm actually going to exit the trade. Now, why is this my exit? Now, this is my exit because this is what I'm planning for. The difference between 116 and 125 is going to be $9. Once again, we are dealing with option strategies. So that's going to be $900. You're going to multiply your $9 by your 100 shares, and that's going to give you $900. Now, with the $900, that's going to be your gross income if you go ahead and close the trade right then. However, in order for you to get your actual amount of money you're going to take home, now you're going to go ahead and use the delta. Hence, I mentioned the delta is very important. You're going to multiply your gross of $900 multiplied by your delta, which is going to be 65%, and that should give you a gain of $585, everything remaining equal. Now, that is the short-term outlook for this stock. Remember, we did buy a very long expiration date, almost a year out. So in the short term, and I do believe this stock is going to hit these prices very, very soon. And once again, the stock will have pullbacks. It's going to go up. It's going to have pullbacks. If you're going to go ahead and enter any option strategy with any stock, make sure your thesis is strong. So whenever these pullbacks initiate, you don't panic and close out of the trade. So let me just explain the short-term gains for you once again. So you're looking to exit this trade when the share price gets to 125. The difference from the 125 minus your 116, where you actually get into the LEAPS option, is going to be $9. You multiply your $9 by 100, and that's going to give you $900. You take your $900, you multiply it by your delta, which is 65%, and that's going to give you a net gain of 585. So that is how you benefit from this LEAPS option in the short term. Now, how do you benefit from this LEAPS option in the long term? Well, I'm glad you asked. So now what you're going to be doing is going to take a lot longer to go past 125. So that's why we went out and we bought such a long expiration date. So what we're going to be doing, we're going to be waiting until the share price goes up probably way past 125. In the interim, while we're waiting for that to happen, we're going to be going ahead and doing what's known as covered calls against this LEAPS option. Now, if you have a short-term outlook on this, it is not a very good idea for you to go ahead and sell covered calls. Hence, I waited for this part of the video to introduce this option strategy. Now you have the LEAPS option. Let me show you how to go ahead and do the long-term options. Now let's go ahead. We're going to clear the parameters right here, and we're going to flip the options trade. We're now going to go to sell, and we're going to go to call, and now we're going to choose a closer expiration date. Ideally, I like to go out a month or more, so I'm going to go with October 10th, which gives me around 28 days to expiration. I'm totally fine with that. Now I'm going to go ahead and choose my strike price. The strike price I'll be choosing is going to be way above the share price. The reason why you want it way above the share price is because you're going to be using your LEAPS option in order for you to go ahead and do this trade. Your LEAPS option is going to act as collateral. So we're going to go all the way up to look something that suffices. So I will be going with the $145 strike price. The $145 strike price gives me a chance of profit of 92%, and I will be paid. The amount I'm going to be paid is going to be $83. So by having this LEAPS option in my portfolio, I'm now able to make around $83 on a monthly basis. Remember, it's not going to be exact every single month, but that's just a good number to go by. Now, the next thing is, by making $83, you spent around $3,000 in order to acquire your LEAPS option. So your ROI, or your return on investment, is going to be around 2.7, around 3%, which is really, really lucrative. Now, I know you're asking yourself, how did I just come up with the $145 strike price? Well, for that, you're going to have to rewind the video. When I demonstrated how to purchase the LEAPS option, if you guys pay close attention, you guys would have seen that the break even was around $145 for the LEAPS option. So once you're choosing your strike prices for your sell calls or your covered calls, always make sure you go at break even or above. That way you do not lose on the trade. So hence I chose 145. Now, can you go ahead and choose any strike price below your break even? Absolutely. But that should be reserved for more experienced options trader that know how to finagle if anything goes wrong. They would know how to go ahead and roll this option in order for them to not lose. So if you are new to options trading, just stick with the basics. Always make sure to choose a strike price at break even or above. You are going to be giving up lots of premium, but you're going to be safe. Trust me on that one. I have been there. I have done that. So this is how you use this option strategy on a stock that's currently trending in order for you to make long-term gains. You should be able to do this for a couple months until Robinhood has settled down. Now, always make sure to do your own due diligence. This video is for education and entertainment purposes, and it represents what I'm doing with my personal portfolio. Now, the only reason why I would do this option strategy on Robinhood is because it is trending. We all know it's going to be added to the S&P 500, so the chart is going to be a bit different to regular stocks. I know it's going to be continue to go up over time, hence I could take that risk. Please do not go ahead and use the LEAPS option on any stock out there. So there you have it, investors and future investors. In order for you to use the LEAPS option, which is one of the best option strategies out there, go ahead and replay this video. You first need to go ahead and do a buy call for more than a year out. Once you do that, you could use that as collateral in order for you to make short-term gains. Firstly, you're going to be waiting for share price appreciation and then close out the trade, lock in your gains. In order for you to make long-term gains, you could go ahead and implement an additional option strategy, which is the covered calls on a monthly basis in order for you to make consistent income, making long-term gains. Now, if you guys have any questions about these option strategies or how to implement it, then go ahead and let me know in the comments below. Now, once again, if you guys want to see the 3 option strategies that I would be using on Robinhood right now because it's trending and to capitalize on that momentum, go ahead and check out the video right before this. I will try to link it in the description below. Now, for those who have made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be a best opportunity for you to go ahead, like the video, subscribe to the channel. Make sure to hit that notification bell, especially if you want to get my live trade every single Wednesday. Now, most importantly, I do create all this free content in order for me to help as many people as I possibly can. So if there's anyone you know struggling to grow a small account portfolio and you think they can benefit from options trading, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start making income with options trading. Now, until the next video, keep pushing your investments.